Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update on Dakota Gold. Dakota Gold is traded on the NYSE American under the ticker DC, and we are joined today with the co-chairman, director, and CEO of Dakota Gold, Dr. Robert Quartermain. And Bob, it's great to have you on the show. As always, I think a lot of people know the success you've had in other ventures like Pretium and Silver Standard, and you came out of retirement to work on this project over the last couple of years at Dakota Gold, and you're really working at the Richmond Hill project to de-risk it. You also have the Maitland Gold Project. Again, this is in the Homestake Mining District of South Dakota. I think a lot of people listening in will remember this is a historically famous mining camp, and Homestake Mining was one of the few stocks still going up in the green during the Great Depression, so a lot of history here. But over the last couple of years, your team has spent a lot of time de-risking Richmond Hill. And we talked most recently, maybe just a month ago, about the resource, but also the initial assessment with cash flow, which is really the equivalent of an economic study similar to a PEA in Canada. And maybe for people not familiar with Richmond Hill, give them a quick snapshot of the resource here and the economics on this project.
Great, Chad. It's a pleasure to be here as always and look forward to updating your listeners today. Yes, the Richmond Hill project is located in the historic Homestake District, and it is one of the property areas that we're focused on. We have one of the largest land packages in the district with over 48,000 mineral acres. And Richmond Hill is on private land. It had been mined previously back in the 1980s, and we took an option on it from Barrick. And as you point out, we've been doing a lot of work on it. We're fortunate that it has over 900 historical drill holes. We've drilled over another 150 on our way to 200 drill holes. And in February of this year, we announced our initial SK 1300 resource, which had 3.6 million ounces of measured and indicated gold and 2.6 million ounces of inferred gold and a very good silver credit. And in July, we put out our SK 1300, which looked at the economics, showing the project is very robust, certainly under current gold prices. And so we continue to drill it now. And the drilling work that we're doing, as well as the baseline work, is going to inform our feasibility study going forward. So a good, strong resource and a good positive economics out of our IA with cash flow.
Well, and as you mentioned, Bob, your team is working hard on the drilling. A lot of drill holes still to report, but you did put out news to the marketplace just last week on the 19th of November, and this was on 26 more drill holes completed in the northeast corner of the project. And this seems to be growing in importance as far as how it may influence the early part of the mining sequence. So maybe walk us through, I guess from a high level, just to start with, what you're learning from this northeast corner of the project.
That is correct. The northern part of the project is where we plan to do our initial mining. When we look at our IA with cash flow, and particularly the measured and indicated plan, we're looking at mining about 2.6 million ounces over a 17-year mine life. And that's at a grade of a little over just half a gram. And so that informed the IA with cash flow. And so we've started doing additional drill work defining that resource, which will inform that first 10 years of mining. And as you point out on our release on November the 19th, we had two areas that we were focused on. One was continuing to expand the area of drilling that we've done to the northeast corner. And, we had some very good intersections, one of those being our hole number 278, where we hit 1.75 grams over 19.9 meters. So a very attractive result. And then also had another good hole with resource hole number 295, which intersected 2.1 grams over 30 meters. So both very good holes. And that shows that this area has good, strong mineralization. And of course, it's substantially higher than our IA with cash flow analysis. So that's why we're drilling here, because it shows that perhaps we have an opportunity for higher grade in this area. And then we've also been doing some of the metallurgical drill holes, which will go in as part of the studies that we need to do that will inform the feasibility study. So you're right, very good results coming out of that north part of the project. And we still have a number of holes yet to report. I believe we have close to 40 drill holes that we're still waiting on. So between now and the end of the year, we still will be giving drill hole results to the market as they become available.
All right. Well, we'll definitely keep tabs on all the results still to come. But to the point you just made, what strikes me about these recent results is just the higher grade nature of them compared to the basic project requirements, which are going to be substantially lower. And I think it would be helpful for people listening in to maybe put this into some frame. People that invest in Canadian or Mexican narrow vein mining may be used to seeing higher grade gold intersections. But then if you think about people that invest in Mexican heap leach or Nevada heap leach mines, they're operating at zero point 0.2, zero point 0.3 grams per ton. Even your project overall is modeled at a lower grade. So when you see something like 1.75 grams per ton gold or 2.15 grams per ton gold over broad intercepts, 20 meters, 30 meters, that does raise the grade profile. Maybe explain to people why this is still so very economic in a heap leaching environment.
That's right. I mean, I think the way that people should think about this is the template that we have with the Wharf mine, which is just 2 miles away from us. The Wharf mine has been operating for over 40 years. It produces over 100,000 ounces a year, and it does it from heap leaching. And it's been shown to be the best way to recover gold in this environment because you have a lot of low grade gold. And as you point out, in our measured and indicated plan, leach feed grade is around 0.56 grams per ton. Some of these holes that I just discussed with you, we're seeing grades up between 1.7 and 2.1 grams, so substantially higher. And what that allows us to do is characterize the mineralization at the north, where we can start our mining first, where we have higher grade, where perhaps we can recover more gold, and that will certainly help the economics because it allows us to pay the project off. From the initial assessment with cash flow, we were looking at a total capital cost of around $384 million, which includes a $50 million contingency. And the more that we can mine slightly higher grade and produce more gold in those initial years is certainly going to be beneficial for the project. So when you look at heap leach projects throughout the Western United States, thinking certainly in Nevada where there's many heap leaches, you're right. They're kind of perhaps lower grade, but we've got a good robust grade here at 0.56. And this drilling that we're doing now is showing that there's a way to perhaps augment that mineralization with some additional mineralization that we're discovering up in the northeast corner of the project.
Yeah, gotta love to see that higher grade, sometimes 3 to 4 times the average grade, so that you could pay things back sooner, generate those revenues up front to help de-risk the project after bringing on the debt to build it. And it's still a pretty low capex overall. Let's maybe talk about that briefly. A lot of people look at the project and they're expecting a higher price tag, to the point, Bob, where they think maybe you guys have miscalculated how expensive it actually is. But there's a lot of infrastructure advantages here at the project that are different than your traditional project, maybe way out in the middle of a desert somewhere. So maybe speak to why the capex is so low and how you can pay it back even quicker with this higher grade, but what makes the project work at those numbers?
Well, as you point out, it's due to the fact that because it is a heap leach and we're looking at producing at around 30,000 tons a day, that the plants that we're going to need for the project are well understood. So we can get material which is more or less off the line. The plant facility will be the right size. We know that we'll be able to use the trucking fleet similar to what's more or less off the shelf. So that informs that capital cost that we're speaking about.
Well, and isn't another advantage, Bob, that people can literally drive to site as opposed to having to build a camp? They can just drive from town.
Yeah, that's certainly very important for us from the fact that you've got people who can live in the area and are able to drive to work. I mean, location is always important, and having individuals working in an existing mining camp is really very important because of the familiarity that individuals have with it, and allows us to be able to attract the skill sets that we need in that area as well.
Well, and you mentioned you were doing some of the metallurgical work. You've done some metallurgical work on the historic information you had, and now you're starting to analyze the drill results as they come in and do some geotechnical drilling. And as you look at the metallurgy, your approach to this using heap leach is a little different than your neighbors at Core Mining at the Wharf Mine in that they load material on the heap leaches and then remove it. Your plan is to leave it on there because you'll believe you get better recovery rates by doing so. Would you like to unpack that and put a little color on that?
That's true. I mean, we have an opportunity with the size of the property that we have to build on larger heap leach projects, which will allow us to put our material on the pad and leave it a little bit longer in that regard to make sure that we're able to recover the maximum amount of gold that we can from it. We also have our silver component, and by putting in a Merrill-Crowe system, we expect that that will also help us recover additional mineralization as it relates to silver, because silver, of course, is certainly a good component with respect to the resource that we have. But as you point out, we'll be able to have longer term pads, which will help with a longer term recovery with respect to the gold over time. And again, because we know that Wharf recovers the gold, we expect, because we're working in similar rock units, to be able to have that type of recovery that we know works well in heap leaches. And that's the main reason for building a heap leach here, because it's in an area where it's been used before. And that's the best way for us to be able to create value in the resource we have, is going through this heap leach process.
Well, and you mentioned the distinction there on the silver and using the Merrill-Crowe for that recovery in addition to the gold. Obviously, Bob, the company's Dakota Gold, but that doesn't mean that the silver is a throwaway metal either. And so you have over 6 million ounces of gold, but you have 60 million ounces of silver. So maybe talk about the advantage of having the silver kicker here.
Well, the nice thing is that when it comes to our financing opportunities, our focus is going to be on the gold. And as you point out, we do have a silver credit. Now, silver recoveries in heap leaches tend to be a lot lower than the gold, but it allows us, as we look to finance this in a few years, once we're finished our feasibility study, then, there are many royalty companies and streaming companies which would be interested in perhaps looking at the silver as a source of capital for us. And so as a result of that, we can look at that opportunity with respect to the silver and keep our main focus on the gold, which is the really larger component of the economics on the project.
Okay, so the silver gives you kind of that optionality when you're assembling the capital stack to maybe look at royalties and streams as part of the equation along with the debt and equity. So definitely an interesting contributing factor. Speaking of the feasibility study, this is something I believe the company envisions to be out in 2027. So between now, here at the end of 2025 and 2027, what are the major work streams to build towards that feasibility study?
Well, there are a few things which we're doing. One, of course, is the baseline work that we have to do, which will help inform the feasibility work. We've been able to have conversations with the regulators, and because there's an existing mine in the area, some of the baseline work that's going to be necessary to inform our studies at the end, which we will do when we complete our feasibility study. And then, as you point out, we want to continue to do some infill drilling in order to better understand what we're going to be doing with that first kind of 10-year mine plan that we're looking at, that will minimize our disturbance, because our plan is to do concurrent reclamation as we go through mining, so we can keep our disturbance minimized in the general area that we're doing our heap leach operations. And then with respect to the feasibility study as well, because we have different rock units on the project, we're doing a very comprehensive metallurgical study, which will inform how we're going to get our recoveries across the project. And that ultimately will help inform the mine planning and the sequencing, which we want to do with it. And then there's just the engineering studies with regard to the capital costs that we need to be able to manage. And as a result of that, we'll incorporate all of that, the structural materials that we're going to need in our plant facilities, as well as our mining fleet, which we'll need. So many things will go into the feasibility study. And what's really important is we have a great team led by Jack Henris, who is doing the teamwork that we need. He's brought in a great group of engineers who are able to inform our studies going forward. And so it's really the team in Leach, South Dakota, that are driving the positive outcomes that we're going to have with our feasibility study.
Well, and Bob, maybe one last layer of opportunity here for people looking at Dakota Gold is, at the onset, I mentioned you came out of retirement to take part in this company as the chairman and CEO. And one of the things that caught your attention beyond the Richmond Hill Gold Project is the Maitland Gold Project. And so this is maybe further back in the backing order, but as far as the optionality on the project, you've got two really big higher grade discoveries there, the JB Gold Zone and the Unionville Zone, that are the potential future of the company even beyond Richmond Hill. So maybe speak about the optionality that the Maitland Gold Project brings to the overall equation.
That's great, Chad. As you point out, we have a district play where we have a Richmond Hill project, which is the near to production mineralization, which we hope to have up in operation, later this decade in 2029, based off of our assessments at this point in time. And then Maitland is a long strike of the historic Homestake mine. Over 40 million ounces was mined from there. And we've done a significant amount of drilling. And to date, we have 47 intersections up at what we call our JB zone. And our average grade is around 10.7 grams per ton over 4 meters. So very high mineralization. And we want to continue to explore it. And it's one area where, from a long term valuation, as you point out, we're in an existing mining district. And so having Richmond Hill up and producing can provide that cash flow that you need to be able to certainly expand on and outline a larger resource up at the Maitland project. So we're very excited about our discovery there. It's the first discovery made out of the Homestake mine along strike. And so it's future optionality. And I think that's the key thing for shareholders in Dakota. You have near term at Richmond Hill, you have the Maitland project, and then you have this other 48,000 acres where we have lots of indications of gold mineralization on it. And we continue to work and assess it. But right now, as you point out, our focus is on our work at Richmond Hill.
Well, then, Bob, just as we wrap up, we've talked about the bigger picture optionality there, including the district scale land package, Maitland, and Richmond Hill. Let's narrow it back down for people just as far as the batting order for news coming out over the balance of the year and maybe the first half of next year. What are the key news milestones that you want people watching out for?
The key thing is we're going to be focusing on our drill results coming out with respect to Richmond Hill. And then as we make milestones going forward with respect to metallurgical or other test work, then we will certainly continue to get those into the marketplace. But our current results are going to be kind of drill informed, and then data as it's applicable to our feasibility work will be coming over the next year.
All right. Well, appreciate you giving us the update, Bob, on Dakota Gold. We'll definitely keep following along with all the news flow here at the KE Report. And for those of you listening in, if you want to follow along with the news, definitely click on the link below down in the show notes. It takes you straight over to the Dakota Gold website, right to their news section, where you can sign up for updates that hit your email inbox or just follow along with the news as it's released. There's going to be a lot of assays coming out, and I'm sure we'll be diving into those together. Bob, thanks so much for coming on the KE Report. And as always, looking forward to our next conversation.
Great. Thank you, Shad.